But I don't go live. Hey, please join, comment, and share while waiting for others to join the live so that we can actually push together. There is no time to waste. We have a lot of information to share today concerning market analysis, and I believe that it's going to help you a whole lot, on how to improve your trading this week. And so please make sure you share the live, and also comment on the live as well. It is very, very important that you share this program and also invite others to join us as well. This is basically market analytics. Please share and invite the other people from the group, please. This is very important. We set 5 a.m., so it's already 5 a.m., and all the three persons are connected. We need to get serious, and I have no time to waste. I'm going to be starting the analysis in a couple of hours, in a couple of minutes from now. And anybody coming late, that is your problem. We need to be very, very prompt with time and avoid wasting time. Time is precious, and you all know that. This is basically pro free market analysis, and you all know how powerful the signals are. So you should be waiting for the class, not the teacher coming to wait for you to come. So my friends, we need to be serious, and we need to actually increase the speed at which we react on important subject like this. So I'll be starting in the next 5 minutes. So while I invite the others to join us, I'll be starting in the next 5 minutes. Please, while waiting for others to come, do share, like, and comment from which city are you watching us from, please. From which city are you watching us from? From which city are you watching us from? Or from which country are you watching us from? From which country are you watching us from? Or from which city are you watching us from? From which city are you watching us from? Please like and share. Comment your city where you are watching from. Also, let us know if this program has been helpful for you. If you have been gaining value, please also let us know. If you think that there are things that we should improve on, please also let us know. It is important for us to know if we are doing it the right way or not, and if we can improve or not. It is very important for us. And your comment, your critics is going to count a lot. Your critics will help us probably do better. And so criticizing us today doesn't mean that you hate us. It simply maybe you want us to improve. So if you think that there is anything we should do to improve on the quality of the service that we're offering you here on our platform, and also to actually uh, improve on the content that we are providing out there to the people, please, you are free to comment, you are free to encourage us, you are free to tell us what you think, as we are going to be taking off the session for today in the next 2 minutes. Also, I want to appreciate all those that have been watching the videos and also those who have been subscribing for the video. I can see that the Hidden Forest Secret Day 1 has made up to has made up to has been able to make up to 800 views within the past 5 days. So that is close to 1,000, which seems very powerful. I also saw a real video on this channel that has been able to do up to 450 views within 24 hours. Definitely means that the audience are getting more engaged and making more sense. Thank you for all those watching from Boya, from Bamenga, from Bahrain, and from Yaoundé as well, from Kumba, the person from Kumba. Do you know about the White House in Kumba? I own that house. So definitely you can come and see me there. Okay. Okay, great people. I believe that we have the right audience all connected already for us to begin our journey this morning. I also want you to confirm with me if the audio quality is good enough, if the sound is good enough for us to drive in. So please let me know if the sound is good, if you can get me all well. Okay, those from Douala, remember I'm always available in the office. So if you have anything, any issue, anything you want me to help you resolve, you can always meet me in the office, okay? Very important. So I just hope that the sound quality is good and everything is normal and stable. I'm going to be presenting my screen with you where we are going to be diving in straight to the market analytics. Very important. Very, very important. Okay, please confirm with me if you are able to see my screen and also if you can get me clearly. I believe from the control device, everything seems all right. Thank you for all those who made our time to connect this morning. Thank you to you, Edwin, Clinton, and all the rest. Bless etc. So, today we are going to be looking at midweek market analytics. I gave you guys the market analytics for the week already, and for I gave you some analytics on Monday, and all those all those analytics has been 100% target match. And so what next? We did for GBP USD, and on GBP USD, this is just a quick recap of the analysis that we did on Monday. And so if you want, where you have access for free signals and all of that, which is going to be very, very strict from January. To have access to this group, you just need to have an XNext account under my link and a minimum deposit of $50. So these are the result of the analysis. GBP USD gave us 130 pips from Monday till now. So the same signal run from Monday till now. Euro USD gave us a total of Euro USD gave us a total of 80 pips. Then the dollar index actually rallied up for about 64 pips. Then we also have the case of the Japanese yen, USD Japanese yen, that rallied up for about 94 for um 90 pips or 100 pips, and that body has been profitable and everything has been moving well. But the week will not end at that level because we need to continue the week. All right, we need to be able to have set up for the week. We need to be able to see how we can trade today, Wednesday, Thursday, and Friday. Okay, so it's very important. So what we are going to be doing here is I'm going to actually break down some other few charts with you, and I'm going to redo back the technical analytics for the dollar index and the other ones as well. So looking at the dollar index as where we are currently, this is the chart that we have. I always like to check up the dollar index before analyzing any other pair. Reason being that the dollar index actually is measuring the value of the US economy against a basket of some major economies. So at a certain point, evaluating the dollar index will give us a good idea of what other pairs are going to look like. Secondly, I always like to use many market methodology in my analytics. My analytic method is going to base on what it is easy to apply on that chart for that day. So if I see that it is market structure that I'm going to be using to analyze my chart, then no problem, I'm going to use market structure. But I always do as much as possible to always depend my analytics on higher time frames. So if I'm to look, we had this trend line on the dollar index, which is a vital point. It has been broken already and retested, and it actually brought up some bearish momentum for the dollar index. That trend line was broken, and after the trend line has been broken, we can do an update of the trend line rate, which we are going to place here. And based on the trend line rate technique, the dollar index has not met it. And the second trend line, which is the outer trend line from a trend line ray, shows a significant point of value, and we can clearly see it from the initial down here. Let me map down the initial for you to see quite well. So this is the initial, and up here. So that makes that trend line quite valid and very interesting for us to look at setups during that on that structure. So the first thing is clear. This trend line was violated, and there is what we call the break and retest technique when it comes to trend line trading. So definitely this market could rally a little bit up to retest on this trend line and then give us a further drop. This is a quick and an easy analytics on the dollar index using market structural mapping technique, and that is interesting. Also, I'm going to analyze the dollar index in a different way while minimizing what we've done already. I'm going to make these lines a little bit blur so that will work with also another methodology without actually getting the chart. So quickly, I'm going to make it blur, and I see something different as well, a different methodology. I hope you begin to see that it is not just analyzing the market with a single or with a single time frame. On this other side of the game, I can see that our market structure was broken and we had a change in market characteristic at this level. So we had what we call chokes from this point here. I'm going to make it thicker and better for you to see. So we had chokes. So I'm going to take the line to change the market characteristics, and yeah. So we had the break of a change of structure of market characteristic at this price point, like for the dollar index, and it definitely means that we could actually do structural mapping for this market. And so if we were to do structural mapping for this market, then we have a high here, okay, and we definitely going to have a low as well from the end of that trend that actually caused the break. That trend that always caused the break is called the origin. So we have this structure map, and this market rally back up to this level here, and we saw some nonsense movement during the news. So it actually the first line or the first break of this structure, it was not valid. Price didn't actually break the structure. Price just struggled to mitigate was another structure being created from this low. It breaked, so it actually break the downside quite low, and so there wasn't any significant break to the upside because there were just a weeks of the candle that mitigated above that structure, but failure to close above the zone did not make it a significant zone. So we have more of the volume flow to the downside. So the shift is much more to the downside. And at the end of the day, we have caught up with a counter trend based on the market structure technique. So we are caught up on here with the counter trend. So I've been able to identify that the dollar index is currently in a downward move, and I've been able none of the structure has been broken so far. You understand? So I've been able to show you as well that none of the structure has been broken so far. Yes, so you want me to stop the background music? I believe that the background music is not disturbing, and normally is there. Normally you should have background music on our stops. So what you need to focus is on my voice. I believe so, right? So the background music has absolutely nothing to do when it comes to what we are doing. All YouTube video has background music, okay? So I believe you are getting me, and that is the point. So once we've been able to identify a counter trend in this market, we'll be able to spot out the trend which we are analyzing. So we go back to it all. So if the dollar index is pulling back, is having a retracement, how far the retracement could go based on market structural technique and also based on liquidity exit and entry points. So before I continue, remember my friends, we always look at pullbacks based on a certain degree. Pullbacks most at time will move up to about 61%. And so Fibonacci retracement is being used to actually check out that. So let's just check out a little pullback here. This pullback went up 50%. That was the first pullback. I like to trade with history. I like to compare what happened. And this other pullback went up to 100%. So averagely, we've been able to have like 61% retracement for all pro trends that has been able to manifest within the dollar index. And so we have this current trend. If you want to check the degree of pullback, we see that the current pullback level is at 32% retracement. And so 61% retracement can bring much more of a confluence zone between the 51% level and the 61% level and and the 50% level can bring a whole lot of confluence to the trend line trading technique. So it's actually going to bring me a plus retracement. Then this is what we get. So we have this zone that is in between the 50 and the 61%, which is actually a point of confluence with the trend line, which is going to be making this sixth trend line mark it back as significance. So that is just based on Fibonacci retracement, looking at different price points. And for the video quality, you should be the one to increase your video quality from your end. How do you increase your video quality? You click on the screen, there is setting. So you choose higher video quality. So you are the one to choose, not me. For my own end, I'm picking up the best quality. And when you are watching the video, you are the one to increase video quality. That's how it happens on YouTube. So your video quality will be depending on the data that you are going to be using. So if you click on your screen as you are watching, a setting button is going to will open up, and on the setting button, you can select the video quality. So if you click, you will see settings at the top corner. When you click on settings, you are going to see video quality. Like for my control device now, I am currently at 360p, but if I take high picture quality, it's going to load and I will be able to see clearly. That's how you should do. So if you don't know how to go about that, then that should be of help. Now, part of what we've had here, which is just a zone in between two structures, I would like to investigate the pro trend for important price levels. Okay, so if I'm to investigate this pro trends for important price level, then we are going to see that we have a huge volume influx in this market during the news of the other day, and the volume influx came from a price point where it was almost like a consolidation, right? It was almost like a consolidation. We have two zones. I want you guys to see it very well. Now, the first point was a drop-based drop trading technique, and within the base point, the baser point always carries institutional volume influx, and from this baser zone, we saw the candle leaving with so much of volume. So let me map it first of all for you to understand. So this is a base point, a very important price zone on this chart. Market came to it and mitigating it. Market mitigated it just a little, and price came back to it. This is the drop-based drop trading technique that I actually did on YouTube the other day. Price came back and mitigated the edges of it, but price could mitigate right inside that box. So that is an important price zone where where I can be looking for a possible beautiful downshift. So that is one that you should note. Now, what next again? We also have these structures, a structure here that seems much more of a consolidation between the Fibonacci structural level. This is a zone that actually led for the news, like where the news actually exploded off, around where the news exploded off. We have so much of a consolidation there. Market actually spent some time after the rally, and so that is also another important price point where we saw huge institutional levels or huge institutional volume leaving that structure with so much of energy. So, and I believe that um, now we have two important zones to look upon. So, what I'm looking at currently is very simple. Apart of that, already there are other ways in which you could look at this chart. On this same chart, there is also the concept of major support and resistance areas that could clearly be implemented. So we have this major support zone down here. It's a major support structure, and this is a major support structure, and which the market actually break, and the market did not retest it because when we are looking at break and retest for major support structures, we also need to look how far the break went. So the break on this blue line did not really go far, and the retracement is so minimal, and we, we don't expect that to actually hold up. And so we've had a break and retest of that zone. So the zone now is serving as a support for this market. So there is a possible rally. You get it? There is a possible rally for this market. So I'm not looking much of a short day, but what I'm looking at a very low liquid market for today. So the market is going to consolidate a little bit. That is what I'm looking at, a very low liquid market, and a lot of others are going to be accumulated here. So you need to be very careful today, especially during the London session. You need to be very careful. And after the accumulation, market will rally back straight to this trend line and also to this other confluence zone, and market will seems like it is dropping already. So At this price point where the market is already still seems like it is dropping already, I'm not going to enter fully because I am also targeting a more stronger price above here. So what I'm going to do is when the market comes to this first zone, I'm going to keep my probability that the market can actually just break it automatically. If the market break it automatically, what we are going to do here is simple. We are going to wait for the second zone. But if the market doesn't break it, okay, and it react here, what I'm going to do to confirm a low position entry is that I'm going to switch down to a smaller time frame like the 15-minute and confirm a change in market characteristic in this first zone before I execute massively. And by so doing, we are going to be able to pick accurate positions on this setup. Now, once a setup is done like this, what do? You need to understand that this is just an analytics and a prediction of what the market will occur. It definitely means that if the market doesn't go the way I think, I'm going to redo my analysis because we do not trade what we think, but we trade the realities. It simply means that if this market behave the way I have analyzed, it get to the structure in which I am expecting, I'm going to investigate to ensure my entry is accurate and it is confirmed and I enter my trade. But if it doesn't go the way I think, if the market get up in the morning and then just start selling, I'm going to hold on and observe like for an hour or two or four to just make sure that what I'm seeing was not a fake out. And if what I'm seeing is not a fake out, I'm going to redo my analysis again and look for new possible trade entry. So that is how you should go through your market analysis. It is very important that you put that, and very, very interesting if you do your analysis that way. Okay, so let's move to the next pair of the day and see what it is actually saying. So I'm going to choose which pair do you propose for us to handle after the dollar index. Already, the dollar index will give us an idea of what other pairs will look like. So if you want to actually if you want me to actually work on a pair, just comment in the comment section down below. So which pair do you want me to work on currently? But I believe the analytic method and the way I actually approach the chart can give you a good idea on what to do. Okay. So comment in the comment section which pair you may want me to pick up next. Which pair you may want me to pick up next. Okay. I'm going to be taking up the next pair, which will be the dollar. Let me say I'm going to pick up GBP USD. I'm taking mostly major pair, or let's start with Euro USD. So this is the Euro USD pair. We're going to start with Euro USD, and I will see exactly what to do on this pair. So simple as ABC. To analyze this market is very, very simple. and very very simple in the sense that if you know the right analytic method, you have no problem actually working on the analysis. Um, So it is very very simple for us to easily methodology to use. So it also based on higher time frame perspective. I always start by actually looking at higher time frame before I can go ahead to do anything. I always like to look at the higher time frame before I can go ahead to analyze my chart frame. Here is definitely uh, the daily. Let's look at the daily time frame and see what we have on the daily time frame. So definitely we had a market that was quite in a drop, and this market actually showed us a lot of signs, right? And this market actually was targeting a key zones, which I could easily spot out. This key zone or this key structure was an important price point on the weekly chart, and I will show you guys the point. So this point, this is actually the point. This point was a point where the institution rested a little bit after a strong push up for the Euro USD pair. So this point actually served as a break, and a lot of things happened here. So there was some huge institutional orders left unmitigated at this price point, and you can see that the market rallied back down exactly to that zone, right? The market actually rallied back down to that zone then and came and mitigated the structure. And so I hope that you can see how clear that zone was gotten. So we saw a market that was rallying to the upside very currently, and we could use different analytic methodology to plot out this market. So I'm going to use on the 4 hours chart, I'm going to use market structure methodology to plot out the market to simply find out important price point on this market. So I start my low. I'm going to mark my swing high at this point here. Very simple. And I'm going to mark the next low. This low actually created a new high, so it's a very strong low. And this low actually went forward as well. Let me make this line thick as possible. It is important for you for it to be thick so that you can have a clear visualization on what we're doing. So here we have a new high that was created at this point, simple as ABC, and we have a new low that was created. So currently the market is in an upshift without any cheating. We can say that Euro USD is in an uptrend, right? So without arguing, without doubt, we can say that Euro USD is in an uptrend. So what am I gonna do here? It's very simple, my friends. Listen to me very attentively. So once I identify that I am in a counter trend, what I'm going to be doing is to investigate the pro trend of that instant to find out the important price point in which I can execute my trade. So right here, if I want to study this pro trend for institutional price action, we can see that there was a rally base, no, there was a rally drop base and a sharp rally on this chart, which this base, the volume that left the base made us to actually norm this base as an institutional demand structure with a high institutional volume. So this is automatically a demand zone. So this will be a demand structure. What is my demand map? So I can actually put it beneath whatsoever, but it's a strong demand. So this is a strong demand. So it's a base normally, but I can put it a point of interest whatsoever we want me to put it. But it's a strong structure because of this huge buy candle on the 4 hours that left the structure. Look at it, the market consolidated for 1, 2, 3, 4. And after the 4 hours of four different candle consolidation, we had a massive candle that left the structure. And this massive candle now came to create what we call an institutional candle. And this institutional candle could be clearly defined with a huge volume influx. That is one zone, very important zone. And also we have a second important zone just right down here, which has not also been mitigated. That was also a rally-based rally zone. So these are two important structures where we can actually look at a possible price shift when you are trading this pair. So that's how you get important price point. And you can also add up the Fibonacci technique to check how far the retracement could be at that level. So the second zone is lying on Fibonacci 61% Fibonacci level. And I'm going to jot it down. I'm just going to take that line. Okay. So 61% Fibonacci point is at this black line. I'll just change the color probably from that color to red, for example, or to blue, saying it's a demand structure. So these are important levels that you should not ignore. You should not ignore on the USD, on AWO USD. You should not ignore this point. So it definitely means that we have the market first of all was held by a local support, which I showed you from the first analytics signal that I provided. So the market was first of all held up by a local support. So what I'm actually looking at today is there is a possible global volatile market or consolidative market that could occur today, and a possible sharp drop in price into the first point price of interest. And what we can observe here is that the market can behave as if it want to start rallying, and then we see a sharp candle that goes up just to come and mitigate in this other price point. But the candle may not end up closing here. So we just see the wicks of the candle that will just come and tap into the structure pop and then begin to rally up very significantly. So when the market gets to this price point, you need to be very tactical. When the market gets to this zone, you need to be very tactical when the market gets to this zone. So this is a clear analytics on Euro USD that will help you to actually see how you can trade better. You see that on this chart, I simply use market structure, no need of a trend line. No trend line was used here because the trend line method was not adaptive to this market condition. Okay, so we're picking up the next pair, which is GBP USD, and on GBP USD, we just look at see our last signals was pure, was clean, was clear, with a lot of logic. Please give this program some good comments. Give us share this program and give us a like. If you are watching us and you've not yet subscribed to the channel, make sure you subscribe to the channel. Here again, we also saw a market shift, a very important market shift on this pair. There was a change of market characteristic on USD on this pair, GBP USD. There was a break of structure, which I think I identified it early. There was a change of market characteristic here that was clearly defined on this chart, and so we can begin mapping this chart for a possible upside market structure. So we have this low created at this level. We also have this high that was created at this point here, and this high was only broken at that level. And we're gonna go for to pick up the lowest structure, the lowest swing structure that actually took off this high. And so by so doing, the lowest structure is right here. So this is all what we have for USD so far. Okay, and the shift for the USD has been in an upside. You get it? So the shift for the USD has been in an upside. And so, what are we going to do? It is very simple what I am suggesting here. And listen to me very attentively. This is what we're going to do. It is very simple. We are going to analyze the pro trend that is actually leading to the counter trend to investigate important price point A, B, C. So, what do we do here? It is very simple. This here, before the news on the Friday, okay, we had this choppy movement where the market actually came and reacted upon. And also, before that happened, we also had an inertia. I always call this inertia. This was an inertia point, which is slightly below it. Before this movement took place, there was an inertia choppy and explosion there. So the market got choppy a little bit around here, where you can see my figure, right? The market got choppy around there. Okay. After that, uh, what we saw, it was a massive break to the upside. This zone now becomes a point of interest. You need to understand Forex is not magic. You need to get your point of interest and wait for price to come to the zone. So these are my point of interest. You get it. Significant zones that I'm looking upon. You get it. So this market actually we saw a break and retest of this choppy movement just to show you how important it was. It is true that it has been mitigated, but sometimes mitigation can be done twice. You get it, even thrice. You get it. So the first point here, market can definitely come back to it, and also we're gonna do a trend line here. So the type of trend line I'm going to be doing here will be based on the line chart because there is noise here on these weeks. You're not going to know exactly which week to take. We have an encircled blue. So this structure is noisy. So when we have such noisy market, we will switch our chart to the line chart to be able to draw our trend line. So I will go to the line chart and I'll be able to draw my trend line using the line chart rather than the trend line. So this is what I will have. Okay, this is what I will have. So after drawing my trend line on the line chart, I'm going to come back to the candlestick chart, and you guys can see how where it is passing. So this is now the accurate trend line that we can consider at this price level, and you can see that there will be confluence at these levels. So what I'm expecting for the USD, GBUSD, is that we could have some choppy movement here and a drop to this first point and a behavior of a possible rally. But maybe at the end of the day, if this movement is not clearly changed, a rapid sharp into this movement and a powerful upside. So when price comes to this important price zone, we need to investigate and confirm our trade before entry. Okay, so that is already three pair trash this morning. So I'm going to trash the next pair, which is USD CAD. I am taking from your suggestion. I'm taking USD CAD for the suggestion that somebody has provided, and we are going to just quickly delete all from this chat and see exactly what we got. Higher time frame is one of my biggest secret because it helps me to see where the market is shifted to, and it can actually help me to improve on the way I trade. And so, based on the higher time frame, the market has been in the perfect rally, which I can quickly define without any time wasting. So, I can define this movement on the swing structural basis, and we have this high at this price point here, and also we got this low at this other price point at this level here. And again, we had the swing high structures definitely marked from this zone here. And as time goes by, the trend goes a little bit more weaker and weaker for this market. And but we've not really see a significant change in market structure here because we got this low and this low has not been broken. So at a certain point, the US Japanese USD CAD seems rather to be in a pro trend after a pullback, right? So we have this low, this high that was created, and from every indication, the USD CAD chart seems rather to be in a pro trend rally. So it is very simple. It's because market structure hasn't been violated in any way for us to say that the market is in a downtrend. The market remains an uptrend as long as structures swings keep being respected. And so what we are going to be doing here is simple. We will just look into this market and see possible price point in which we could do some good buy on this chart. So on the USD card, we are looking at key levels, or probably we could also use other methodology inside this one. So we're going to adapt, we can borrow other methodology. So after looking at this, there is a trend line methodology that could be borrowed for this market that was actually rallying to the upside. Trend line methodology has been borrowed from this end, and on our trend line methodology, which is quite valid, we've seen this market that was in an uptrend and suddenly went out of the down the line, and we got ourselves in this. So what we are going to be looking for, rather, if I'm to trade this market, I'm going to be looking for a touch in here, okay, a pullback into this trend line, okay, and a rally to the upside. That is what I'm looking at, right? And apart of that, my friends, we also have other points to look on, which are also support resistant points as well. So we have this support zone that is going to give from a basal rally. The basal rally is that little base that was broken for a rally to be created. So in this bottom, there is a basal rally, okay? There is a basal rally zone. The market actually came, got choppy a little bit, then break the structure to the upside. So in another lamplight, okay, if this first setup doesn't hold, if there is not confirmation from that setup, then this is what we're gonna get here. Very simple. We could get the market back here in a rally to the upside. So this is what you should look at when it comes to the USD card setup. So what the next setup that I'm going to be looking at? I'm going to be picking up a raw AUD from the suggestion that a brother gave. So another person is suggesting USD Japanese yen, and we'll be coming straight to that once we're done with this one. There is another suggestion on Bitcoin. Definitely, I'll be picking one cryptocurrency before the end of the class. Simply as ABC, looking at the higher time frame will help me to actually see what I got. So higher time frame is very important. So on the higher time frame, I can actually spot market movement, and I can use different methodology. Simple identification. Channeling was identified on a higher time frame for a raw Japanese yen. Channeling technique is what it will be so efficient at this price level, because the channeling technique has been identified as a possible movement that we've seen here. So the channeling technique on a daily time frame mapped out, and we can actually come to a smaller time frame to check out the channel that was actually identified. So how that can you trade the channeling technique? It is a very simple trading technique and or trading methodology that is based on a particular way where institutions go as far as to accumulate others. So this analytics goes thus. Market actually went in the channel for quite a while. From the month of October, it has been a break of the channel and a retest of the channel. So the market is now in a downward shift, full stop. So now that I've identified where the market is going to, all I just need to do is to identify more sales positions for a whole. So a part of that, we also had a confidence structure, because looking at where we are currently, there's a local support structure here. There's a local support which the market has broken, and the market is actually on that local support. So it's going to be a little bit trickish for this market. We have a basal rally zone here. So these are some obstacles that the currency pair euro AUD can easily face today. So what happens here is that if this structure is broken to the downside, then we're picking up the trade at this level. So you're going to execute the trade if only this level is visible. There is another possibility that we're going to be having. Either the market gonna get choppy and rally back, so the market gonna rally back up first, gather momentum and come and break the structure, or still this market could just break to the downside. But you can only execute a sell position here only if this market breaks to the downside. Now, going deep into your analytics, it is very vital you investigate this current movement. And investigating this current movement, we have a trend line here, and we have a support zone here. here got a lot of liquidity in it because when the market is going to be pulling back up, many people will be seeing like shooting this trend line. And so there's a possibility market is going to break above this internal trend line, clearing off all liquidity here to react here and create a double top. So those trading this pair, you ought to be very careful, and that is my outlook for that pair. So the next pair I'm really taking right away is the Bitcoin pair, a Bitcoin chart. So we picking up a cryptocurrency is very very important. So Bitcoin, a lot of people are regretting that they have not bought Bitcoin. I myself am regretting. I actually did not want to buy now, but the way things seems, it seems frightening because Bitcoin went down to 28,000 US dollars and we did not buy. Bitcoin went down to $16,000, but I was one of those that was expecting Bitcoin to come low, and I can show you why I thought so. So when I was looking at my Bessel zone here, this Bessel zone that leads to, they always call it the rally Bessel zone. So before that rally started, there was a Bessel zone that was broken. So this was the rally Bessel zone for Bitcoin, and most of the time market has the potential to come back and retest on the rally beta zone, the rally beta zone. So it is around 11,000 USD. That's where I was looking at. Okay, so I was one of those who predicted Bitcoin down to 16,000, was to 17,000 USD. I did so for those that were following me, and that was done because of this important key structure here at 19,000. This was a structure. So the first structure held, but I was so smart, but I failed. But I still can say I failed because there is a possibility that these guys can still get back down there. So what are the little possibilities for Bitcoin this week? What we could look at and what we shouldn't look at. So for Bitcoin, we have the neckline that was violated at this level. Price is to rally a little bit further. If this technique is to be respected, then Bitcoin is to rally right a little bit further to something quite big, quite big here. So if Bitcoin is to respect this structure, then Bitcoin is to move up to about 48,000, which is going to look, a lot of people are going to look at, oh shit, we missed the move. So this is a possibility. Bitcoin's moving up to 40,000 USD, very possible in the couple of days. And the other stuff I want to look here is this local resistance, which Bitcoin has break so significantly. So the worst come to the worst, we got this simple as ABC. Bitcoin could come back to the local support zone to up to 43,000 USD. But if Bitcoin comes and break down this local support and go beneath it, then there is also another zone because it is not over. There is a trend line that is actually moving straight down here on this pair. So Bitcoin have two possibilities to still get stable support and going back up or rallying up. So the possibility of taking Bitcoin up is quite big here. You get it? So we should be very careful in the days ahead. Crypto could be not easy to fail because December is already near. The bull run is always coming up around January, February. That's where the crypto industry booms so hard. So I believe that there are some asset classes that we're gonna begin looking at to purchase, and you'll definitely hear from me before the end of the week what is my take on this crypto industry, definitely. But if all this fails, then Bitcoin is going to be coming down to $8,000, no argument, and we are going to be buying from there, full stop. So that's what I think about the Bitcoin chart. And I'm just going to look at the last pair, which is USD Japanese yen, just to make sure that you are all satisfied that your pairs have looked upon. And this is USD Japanese yen. USD Japanese yen has been in a very strong rally, and remember, it is actually going into a very strong supply structure. This is a supply structure, a very strong one, a very steep one, and it is actually a zone where we are expecting to have a double top on the Japanese yen. So currently, I don't want to think much. My brain is tired. I will have to see you again. I'm going to probably share this analysis on this particular pair with you. I don't like to think when I am tired, so my brain is already tired because your brain ought to work quite fast when doing multiple analysis and to make sure that what you're saying is right. So please, if this analysis has helped you, make sure you like, comment. Please comment your city from where you're watching from. And it was a great time having all of you here. Thank you for actually having confidence in Bell Forex when we were stand for Bell Forex Analytics. See you again another day. Bye bye.